So when I bought my first 12-unit apartment building, I did so with a group of investors, and I put none of my own money in the deal, and I still paid myself $15,000 at closing. So it's called an acquisition fee. Now, some of you might go and go, well, shoot, you have no money in your own deal, and you still get paid at closing. Why would anyone agree to do that? So let's talk philosophically, first of all, about why you should be paid as a syndicator. Now, first of all, let's just find what a syndicator is. A syndicator is a real estate entrepreneur who is finding deals, finding money, and finding an operator or manager and putting them together to make something happen out of essentially thin air. So philosophically, why do you deserve to be paid as a syndicator when you're not putting in your own money in? What is up with that? Before I discuss how you're going to get paid, but first of all, look, you're doing all the work. You are finding a deal, and by the way, by the time you have a deal under contract, then you probably have looked through probably 100, 150 deals before you got to that one. That's the truth. You have spent hours and hours. By the time you pay yourself for this thing at closing, you're like minimum wage, honestly. Number one, if it weren't for you, the investors would not have an opportunity to invest. In fact, without the deal, but without the investors putting in the deal, without you bringing in 7 or 10 people, there would be no deal. So the investor that complains about you being paid as a syndicator is probably not the right investor. The way I think about it is this. You need to be on the same page as an investor, meaning that if you make money, if the deal makes money, the investors make money, you make money. What if the investors make money and you don't make money? Why would that incentivize you to continue working over the years to maximize the profit of the deal, right? So philosophically, you and the investor need to be aligned. And so getting paid at closing rewards you from the long path getting there, and getting paid during the process incentivizes you to kind of stay engaged and maximize the profits. So there's really 3 ways that you can get paid. One is upfront at closing. The second one is while you own the asset, and 3 is when you dispose of the asset. So let's talk about each in turn. So upfront at closing. Upfront at closing, you typically get paid what's called an acquisition fee, and that fee is normally between 1 and 5%, depending on what the deal allows and how much work the deal is. For example, if it's a very stable deal, and you might want to pay yourself a little bit less on the lower end. On the other hand, if you're doing a lot of development, like for example, you're putting in $10,000, $15,000 a unit, and it's almost like a development, then you get paid more because you're having to do a lot more, right? Makes sense. So normally my target for an average deal is about 3% of the purchase price, right? So for $1 million deal, which is not that big of a deal, a 3% acquisition fee would be $30,000 at closing. Kind of makes it a little bit worth your while. The second way you can pay yourself as a syndicator is while you own the building. And there's 2 ways to do it. One is called retained interest or equity interest as a syndicator. So typically, as a syndicator, you get a certain amount of equity simply for being the syndicator. Normally between 10 and 30% of the deal is the syndicator or the general partnership, right? And the investors for bringing in the money get the rest. So for example, an 80-20 split, the investors bring in all the money for 80%, you as a syndicator get or retain 20%. So you actually get paid profits along the way. Now there's another way that you can pay yourself, and that's an asset management fee. This is sometimes done depending on the deal, depending on the situation, but it's normally 1% of the equity, or it's a certain percentage of the NOI, the net operating income. There's different ways to do it. But the idea is this, that you're being paid a management fee as an asset manager. So in other words, you're responsible for doing reporting to the investors, for dealing with the investors, and of course for managing the property manager. So that's the asset management fee. Then the third way you can pay yourself is when you sell the building, or when you refinance the building. In other words, the point at which you return the principal back to the investors. And you do that either by outright sale or by refinance. Now, why is this significant? The significant is if the investors get their principal back, the risk is off the table. And you should be rewarded for, or you can be rewarded for returning the principal back to the investors. And that's called a disposition fee or a capital transaction fee, however you want to call it. And again, you know, what's normally done if the deal allows for it is 1% of the final price, either the reappraised value or the sales price. So those are the 3 ways that you can pay yourself as a syndicator. Makes it very lucrative in addition to the actual equity you have in a deal. Now, this is really important. You got to keep the investor in mind. So it's all fine and dandy that you pay yourself all over the place, but the deal has to allow for it. What's driving the deal is the investor return. Keep that in mind, right? So in my deals, I'm normally looking for an average annual return of at least 13%, If I can get to 15, that's even better, right? So I know around an average annual return of 15%, the investors are very interested in investing with me. So if I'm paying myself too many fees that reduces that return, then number one, maybe I shouldn't do the deal, or number two, maybe I need to pay myself less so the investors make their target return. So keep that in mind as you're underwriting the deal to keep that in mind. So look, you as a syndicator, you're the real estate entrepreneur. You're creating value where there was none. Without you, there would be no deal. Without you, there would be no return. So you absolutely you deserve to get paid. If the deal allows for it, pay yourself when you close on it and while you own it and when you dispose of it. All right, that's all I have today. If you want to find out more about raising money, I have a free ebook called The Secret to Raising Money for Your First Apartment Building Deal, and you can get it at themichaelblanc.com/ebook. All right, hope you found that useful about raising money, and I will catch you on the next episode. Hey, thanks so much for sticking around to the end of the video. I want to leave you with 3 next things to do. I'll give you a quick tour of those, and I'll tell you how to do them. Step number 1 is to download my free ebook, The Secret to Raising Money to Buy Your First Apartment Building Deal. It is an awesome ebook full of tips for raising money and how to do that. So that's number 1. Number 2 is to subscribe to my YouTube channel because I put out new videos all the time, and I'd hate for you to miss it. And number 3 is to watch the next video in line. All right, so what you're going to do is you're going to click on the first thing, which is to download the ebook. That'll open up a new tab. The video will stop playing. You're going to get the ebook and then go back to this video and then click on number 2, right, which is to subscribe on the channel. That'll open a new tab. And then you can go back to the third one and just click on the next video in line. All right, so hope you find that helpful, and I'll see you in the next video.